we miss that face-to-face contact right now, right?
Yes. Today on the Practical Preservation Podcast, we have Lindsey Bennett with us from KIZ Resources LLC. Thank you for joining us, Lindsey.
Thank you for having me.
So tell me a little bit about your background.
I graduated from Penn State, Altoona, with a business degree focusing on management and marketing, and I minored in dance studies. At that time, I thought I was going to open a dance studio of my own, and then I got my internship with KIZ Resources, where I work now, and just was a good fit for me. I live in central Pennsylvania with my husband and our 2 kids, and our dog, and I really love helping people, and I think that's why I was attracted to this business, because I'm able to meet with a lot of people, to do a lot of different programs and help them further their businesses.
Okay. I think that a lot of people fall into their careers kind of that way. They find something that maybe they didn't even think about, and then realize it would be a good fit. So tell me a little bit about, is it not KIZ, it's KIZ?
Yeah,
okay.
Our name started from the KIZ program, the Keystone Innovation Zone program.
Okay.
Was the first program that our company worked with, and it was probably, in hindsight's 2020, we probably should have been tax credit resources or something. We work with a lot more programs than just that program now, but we started in 2006. We had kind of explored the programs ahead of that. Our firm's based out of an accounting firm, and we had clients that were able to start qualifying for these new KIZ tax credits at that time, and no one had really understood that program real well yet. It was brand new. It was a transferable tax credit program. That was one of the first ones the state did. So my boss, the president of our company, had done the research and was able to help successfully do the first tax credit sale in the state for the KIZ program. And we just decided, they decided to made sense to kind of explore these opportunities and work with other programs.
Yes. Yeah. Yeah. I and we'll talk a little bit more about it, but I remember the first time I was at a presentation, I don't know how many years ago it was, and I heard them talking about selling them. And I'm like, well, that makes a lot more sense to me, because most people don't have this passive income. Right. So yeah, it was like a mind blowing, like, oh, this does make sense now.
Yes, so. Exactly. It's like a grant in disguise that way.
Yes. Yes.
Extra step. Yeah.
Yeah. So tell me a little bit about the services that you offer, since it is more than the Keystone Innovation.
Absolutely. So like you said, a tax credit, it's different than a tax deduction. So we're not accountants. We don't prepare tax returns. We're not trying to help you get lower taxable income. The tax credits are programs where you're receiving an incentive, a tax credit, for doing a particular thing that the state wants to promote, or the federal government. There's tax credits for the federal, and the tax credit goes dollar for dollar against any tax liability that you actually owe. Or in the case of many programs for Pennsylvania, it can actually be sold and transferred, and you can get cash into your company. So what our company does is we assist with the application process. Help the company's providing the information about their company, the materials, their tax returns, whatever it may be, and then we help piece the application together in the state's formatting and get those submitted, and then we assist with the compliance follow-up and everything that goes on with the state, and also the sale process then for the credits.
Right. And then is your geographic area pretty much limited to Pennsylvania?
Yeah, we pretty much work all through Pennsylvania. That we do a few other federal programs when they kind of fit with, especially with a historic program.
Right.
We'll assist a little bit with the federal programs, but for the most part, we just work in Pennsylvania credits.
Okay, very good. So talk to me a little bit about the historic preservation tax credit programs, just like the general, how they work, and what people have to do to qualify for those.
Absolutely. So the historic tax credits are designed to help developers or businesses who are renovating historic older buildings, and they want to encourage them to not, modernize these beautiful old buildings. So the program is administered federally through the National Park Service. And then also the IRS has a role because, of course, it's a tax credit program, so you're claiming a credit. And then at the state level, it is the state historic preservation offices in PHMC in Pennsylvania. And so the federal program, you can qualify for a 20% tax credit for your qualified expenditures. And the state program is actually 25%, but there are some other limits we'll get into.
Okay.
In general, how to qualify. So the building has to be old enough, of course, but it can't just be an old building. It has to be listed on the National Registry for Historic Places. So it can be individually listed, where you have your own little certificate that it's a historic building, or it can be a contributing building to a historic district. And you verify that by submitting a Part 1 of the application, which just certifies that you are in the district, you're qualifying as a contributing building, meaning it's in the right era, and it has the features and things like that. There's some rules with the renovations. Then, of course, you have to maintain the historical integrity of the building. So you follow the Secretary of the Interior's standards for historic rehabilitation. And there are pages of guidelines on that available.
There are.
So you have to follow all those. You have to, make sure the easements are correct and you're not destroying some of those beautiful features like the gorgeous wooden staircase or different things like that. And one of the other things that you do have to hit with the program is what they call substantial rehabilitation. So it has to be at least $5,000, I think, in rehab if it's a building that's already owned. And then, or it has to, basically, there's a calculation for it, but basically you have to spend more than the acquisition price.
Okay.
And then all of the expenditures count, except for acquisition and the non-qualifying costs, but all of the actual building construction related costs count, including architectural stuff.
Oh, like all the front end stuff, the design and the
design,
project planning. Yeah.
Yep, exactly.
And you mentioned that this was for developers and businesses, and I think so that's my understanding is that it needs to be an income producing property. Is that correct? Correct.
Yes. Okay. So they do not award credits for an old, a building that's definitely old enough, but maybe it's a personal residence that doesn't qualify for the tax credit. So it does have to be an income producing, and it can be mixed use. I've seen projects that end up having, a loft apartment and then, businesses underneath, but as long as it's income producing.
Yeah. And the state credits, do they follow the same guidelines?
Yep, the state program has mimicked their guidelines right the same way. So we're talking about, comparing apples to apples. So if you're going after the federal program, it makes very much sense to just go right after the state program as well.
And I know when the state program was introduced, it was fairly limited. Is it still fairly limited?
It is still limited. When it was first introduced, they only had $3 million in available in credits. I don't remember if it was last year. Yeah, last year, I think it was the first year it had increased it to $5 million available. And I know there's definitely still advocacy. Unfortunately, with the crisis right now, probably not the best time to go to legislators to ask for an increase, but definitely still advocacy for hope in the future to continue to increase that. I think the appetite in Pennsylvania is way larger than 5 million. So.
And I think it was like the first year there were people like waiting to the day that it was. Is that still the case that you have to be there waiting?
It's still pretty competitive.
Yeah.
They don't necessarily only process them as first come, first serve.
Okay.
They are really trying to be fair. The way the state set up the rules for Pennsylvania is they want to divide the credits equally across the regions of the state. So the northeast and southeast, central Pennsylvania, and then northwest and southwest. So they basically, now that it's 5 million, each region has $1 million, and they look at all the projects that are coming in and they try to fund as many of them as they can. The maximum credit you can get is 500,000. So there have been rounds where they've prorated. You might have asked for 500,000, but maybe they gave you 200,000 so that they could also support a couple other projects.
Right. Well, and that does make it more fair across the state, that, you know, like Philadelphia or Pittsburgh that would have more development going on wouldn't get all the money.
Exactly. Yeah. And if there is a region that doesn't have as much activity in that particular cycle, they'll take those credits then and divide them again further.
If there aren't applications. Yeah.
Mm-hmm. Yep.
Okay. So we talked a little bit about it, but explain the credit transfer program then. So how does that work after you've gone through the process of getting the credits?
So you've gone through the lengthy part. Well, part one's not lengthy. The part two, where you're submitting all your pictures and what your plans are, and then you actually complete your project. You submit your part three, you get it audited at the state level. At the federal level, you just submit your part three that goes to the National Park Service and get approved. At the state level, there's an audit process as well to get those credits. So you have to go through that, and then you get your actual credit certificate. Once you have your credit certificate, that can be used right away against any PA tax liability. For Pennsylvania, those certificates do carry forward for 7 years. If you do have, tax liability that you're going to incur year over year, you can certainly use it. You can pass it through to your shareholders if it's a pass-through entity, which most of these entities that are applying for this are a pass-through entity. But if there's not a lot of liability and the pass-through process is a little complicated, you can sell the tax credit from the Pennsylvania level. And we assist with that. So we have buyers that we've lined up for many years of doing this that are purchasing these credits pretty much each month throughout the year. And we just try to match you up with those buyers and try to maximize the purchase price. The state does not match buyers and sellers together.
Right.
Either you have to identify somebody on your own or work with a company like ours to do that. Typically, the process takes the state about 60 to 90 days to complete. So our process is always to have the buying entity escrow those funds into an attorney-held escrow account, so that as soon as the state goes through their process of their compliance review and moves the credits from your account onto the buyer's account, we can get you funds right away. The money's there and secure, and we can get it wired out to the entity.
And that's the same process, I'm assuming, for the federal also?
For the federal program, they're not transferable in the same way.
Okay.
The federal program, the carry forward for federal credit is 20 years. So they have a very long-term carry forward if you can't use them all right away. The only way to move those credits from the entity that's doing the main part of the project is to create a separate partnership. It's called syndicating the credit. So you're creating a second partnership with maybe the tenant of your building or a large bank who has invested in the building that would have a lot of federal PA liability. They would be able to take on the credit that way. The state credits are a certificated credit, so it's a spot credit that you're selling to the buyer, where on the federal side it's a syndicated. They join a partnership. There's usually an exit strategy for that partnership, right. And they take that credit over so many years
over the time.
Exit
Is the state credit also on passive income, or is that just the federal?
Just the federal. The federal credit is the one that gets applied to just the tax return income. I'm not sure if it's just passive income.
Okay, I thought that it was, but that could have changed too.
Yeah, the state program, you can use it on whatever your liability is, from any source of income.
Okay. it's complicated. It makes sense that you would want to have a specialist to help you.
Yes, there's
I know.
definitely little nuances to all of these different programs,
Yes.
and because I don't work on the federal side as much, that one's not as familiar to me.
Yeah,
as innovation.
no, that I understand that. And when I was on the website preparing for this, I noticed that you do a lot of different programs. So just talk to me a little bit about, the different programs that other programs that people might be interested in that you help with.
Absolutely. So if you are in the market of doing building renovations, there is another Pennsylvania program called the Neighborhood Assistance Enterprise Zone program. That program is actually open right now for applications. So that has designated regions throughout the state that are considered distressed communities, and they provide a 25% tax credit to be used against for the rehab. My little girl came in at the end here. 1 second, honey. The rehab of the building, so 25% of all the project expenses.
Okay, that's and then that's a state program?
Yes, that is a state program, and it works the same way, and it is transferable. We also work with programs for small businesses, startup companies called the Keystone Innovation Zone program, where we got our name. That is helping small businesses to grow, and it looks at their year-over-year gross revenue increases, and you can get a 50% tax credit up to $100,000 per year for that program. And we also work with research and development tax credits. We do work with some nonprofit organizations as well that have some funding through the Neighborhood Assistance Program as well. So there's a lot of different things going on in the state depending on your industry.
Yeah. Okay. Very interesting. So, from your narrow vantage point, do you see any trends or challenges in preservation or in this space that you have, that you're paying attention to?
Sure. Right now, there's just, of course, a lot of uncertainty in general with the current crisis. The state has begun to open some of their regular application cycles for the majority of programs. The one that hasn't opened yet is the historic preservation program for Pennsylvania. So we're encouraging people to reach out to your legislators if any of these programs are important to you, and just let them know how important they are, especially as they're going to be having some very difficult budget decisions to make come November. Just to let them know any of the programs that are important to you. They do want to hear from their constituents, or somebody from their office will take those calls and letters and kind of make a note of what programs are really working for people, and it was just an important time to kind of really be involved. And at least from a preservation standpoint, the job creation from the preservation tax credits, is beneficial to local economies. Absolutely. Absolutely. So these are projects that are helping put people back to work. And that is something that we desperately need right now, and bringing new businesses.
Yeah, definitely. So I don't know if you have anything that you wanted to promote. Do you have any seminars or anything else coming out?
We do. So one of the things that I do a lot through each summer, and usually I'm doing them in person, but right now we're doing them all through Zoom, of course, which is okay. We do seminars quite a bit. So we are doing 2 different ones on the 29th. One is with the Williamsport IMC, and then we're doing one with the URA also on the 29th. I think the Williamsport one is at 11:30, and the IMC one, or the URA one, is at 1. And then we're doing another one with the Altoona ABCD Corp and I-99 zone on the 30th. And then we'll be doing some additional things. So if you just like us on Facebook and everything, we'll be able to have our times and everything there.
Yes. Yeah. And is there any, I know you said about Facebook, is there any other way to contact you?
Help Ollie right now. Yes, we have Facebook, we have LinkedIn. We're in the process of updating our website, but www.KIZresources.com. You can contact us by phone or email. however you need to get us.
Okay, very good. I think that we have used our allotted time with your children's patients, and it is very okay.
Yes, I'm sorry.
I had a meeting last.
They found me.
Yeah, I had a meeting last week, and the man that I was meeting with, he was like, my kids are in the car, they have their iPads, if you hear screaming, that's what's going on. I'm like, at least you're not making your wife do everything. I can handle that. So everybody's kind of struggling with their balances right now.
Yes,
I completely understand.
It's been fun and a blessing to be home with them.
Oh yeah,
there's definitely their challenges as well, but
yeah. So very good. Well, thank you so much for spending some time with me this morning. I feel like I understand the programs a little bit better.
Great. Thank you so much for having me and doing this.
Thank you.